What's up, guys? So today I thought I'd just do a quick video on trading patterns and continuation patterns mainly, right? On boom and crash, right? So I want to focus mainly on continuation patterns. Most of people, if you have been following me for a while, you know that I like continuation patterns rather than reversal patterns, right? Because most of the times when I enter reversal trades, I usually lose, right? That's why I don't encourage you to trade reversal patterns. I like continuation patterns, right? So what are continuation patterns? What are patterns, right? So a penny, not a penny, a pattern is something that so like a structure that almost repeats itself most of the time, right? So I'm going to be explaining just a little bit, right? So we've got what flags, right? So a flag, let's say we're going down, right? A flag is what we go down, right? And the market does a pullback, right? That's a what showing a slowdown in momentum, right? And it's in a consolidating manner, right? And then when we get this movement like this over here, most of the times the market usually breaks out what going down, right? So this is what we call a flag pull, right? This whole move over here, right? It's an impulsive move, right? So they are very effective when you've got this move as an impulsive move. It usually doesn't work if this is a slow momentum, right? So we've got this impulsive move. We also call this a flag pull, right? And usually we measure this over here. If it's 50 pips, we know that from this over here we are supposed to get at least 50 pips, but most of the times we don't work with 50 pips. Maybe we work with 40 pips or something like that, because the market doesn't act the way we want. We don't control the market, it does what it wants, right? So that's like it for flags. And then we also have wedges. So a wedge is let's say we're going up this time, right? So a wedge is so like it starts off larger, right? And then it becomes a little bit smaller, right? As for a flag, it's almost as if is equal, right? It's almost equal. And then for a wedge, if we draw our trend lines, we'll be forming sort of like a triangle over here, right? So for wedges, it's a little bit tricky sometimes, because sometimes they can continue going up over like this, and then sometimes they can continue going down. But there's a simple trick that I just want to tell you. Most of the times whenever you see the market consolidating, right, so whatever it's doing, right, as long as if you are able to draw your trend line, though this one is expanding, right, usually reversal patterns will be contracting, right? So usually when you see the market consolidating, right, know that just after that consolidation you are going to get a large move, right, either up or down, right? So that's what you have to be looking for. You can draw your trend lines in order to get those, right? So if you want a safer entry, what you have to do is, after let's say this over here, you get a breakout to the downside, right? If a safer entry, you can enter on the breakout, or if you want a safer entry, you wait, you draw your maybe your zone flip, and you also already have this trend line. And if the market comes back for a pullback over there, right, you can enter that trade and go down with it, go along with it, right? So that's like some of the basics that you have to look for when you are trading when you are trading flags, when you are trading flags or consolidations, right? Not really consolidations, but why do we say that? Most of the times, especially for the wedge that I was showing you, like this over here. This is an example of a wedge over here, right? As you can see, so we've got this impulsive move to the downside over here, right? And as you can see, we are moving in a slowing down manner, right? And even if we continued right over here, right, at some point, because we are narrowing down over here, at some point the market had to break out of this structure. So it can either be to the upside or to the downside. But what you have to know is the market eventually has to break out of this structure. But usually when it breaks out of this structure, there's usually an impulsive move. Why? Because there's been slowing down in momentum for a while, and when the sellers, let's take this for example, and when the sellers got an opportunity. As you can see, they drove the market all the way down, right? So that's what you have to look. That's what you have to do, right? And in this case over here, if we're waiting for a pullback, we didn't get that at this time, right? So right over here, you could have what, just entered because of this high here, and you see this impulsive move over here, and then after that consolidation, you could have taken your entry, right? So impulsive moves are always there, right? As you can see, we've got an impulsive move to the upside, right? And then we've got a small consolidating manner, right? Let me draw this as a trend line so that you can see what I'm talking about, right? So right over here, so you have to be very, very attentive and be able to spot impulsive moves. You can actually just wait for these setups alone, right? And you'll be able to make money, right? Even if the setup doesn't appear to you all the time, right? You just know that in a reserved trader, if you don't take trades all the time, you'll be a very profitable trader. Don't be a trader that just wants to make money, just wants to be always in a trade. Wait for the perfect setup and wait for the perfect time to enter, right? So over here, as you can see, we've got this impulsive move to the upside, right? And then a consolidating manner to the downside, right? And after that consolidation, we've got a breakout of this trend line over here, right? Breakout of this trend line, and we've got a pullback over here. The pullback is also in a consolidating manner. If you watch carefully over here, right, we also have an impulsive move, right? And we've got a small consolidating manner over here, right? And you enter on this testing this trend line over here, or you can enter on the breakout of this smaller trend line over there, right? So that's how you can use how we can just simply maximize on trading flags and patterns, continuation patterns, to be precise, right? So over here we've got an impulsive move, right? And then a consolidation over here, right? You draw your trend line, breakout, retest, you enter, right? It's just so simple. So tell me what you think. Is this strategy even worth it? Right over here, I can actually spot a lot. Impulsive move, consolidation, enter again, impulsive move again, consolidation, impulsive move, consolidation, impulsive move. So you can just simply wait for these flags over here, and you'll be able to enter the market, right? And this is boom 1000. You can enter for both spikes and both ticks over here, right? So that's how simple this is. But just like any strategy, it isn't 100% perfect, right? So let's take this for example over here, right? It can get a little bit confusing sometimes, right? So over here we've got an impulsive move to the upside, right? And then we've got slow down in momentum over here, right? And then this one needs you to be very, very careful. Why? Because as you can see, it doesn't really work, right? Because we've got this is sort of like an impulsive move to the downside over here also, right? And this is a flag. This is the clearer picture. This is as for me, I would see this impulsive move because the flag is more clearer like this when it's a bearish flag like this. And when I get this breakout of this trend line over here, I could have entered on the breakout of this trend line over here. Let me zoom in a little bit, right? I could have entered because this flag is more, so like it's more appealing to me, unlike okay, let me draw another trend line over here, right? As you can see, this flag is more clearer, sort of like, right? Unlike this impulsive move to the upside over here, right? Though if you'd have drawn your trend lines over here like this also, right, you could enter for your spikes when the market pulled back to this over here, right? So you could have entered for your buys. But as for me, I could have entered for this sell over here, and as you can see, my stop loss would have been hit, right? And of course I would have also drawn this trend line just in case, so that I'll be able to see when I get this first spike, maybe I would have exited at break even, right? But it's just boring, right? Breakout, continue going down. So as you can see, it's not always that we get what a retest to the what to the trend line. So you can enter for your breakouts, but if you want your setup, if you want to be very profitable, you can only enter those setups that you get a retest to the to the trend lines, right? Though you won't get many trades, or you won't get as many trades, and you might lose some of the trades that you enter. So that's it for this video. If you like this video, like, subscribe and share. It helps with the algorithm sharing this video to more and more people, so that it can help also some beginner traders just like you. So that's it for this video. Peace.